This week we have an exclusive interview with Paul Lehnert with Lenderful Solutions. He's Director of Business Development, because I really believe strongly in what Lenderful Solutions is doing, so much so that we here at Reverse Focus and HECMWorld have partnered with Lenderful Solutions to help promote their amazing and powerful tool. I call it a revolution in HECM calculation. So, Paul, thank you so much for joining us.
Thanks, Shannon. Thanks for having me.
Can you tell us just briefly a little bit about your company, Lenderful Solutions, and who you're part of?
Yeah, so Lenderful Solutions, we are a software company. We're based in Birmingham, Michigan, and we are a point of sale solution for financial institutions across the country.
So you guys have a wide array of products, I noticed on your website. What are some of the other verticals that you work in?
Yeah, so the company's been around a little over 9 years, and part of that, we originally started in the first mortgage industry, developed a tool that really is unique and guides borrowers through an application experience that's fully white labeled and branded for each financial institution. Then it's evolved into home equity, consumer lending solutions, as well as commercial, and then recently into the reverse mortgage space.
So what is it that got you into the reverse mortgage space? We're such a niche industry, and we have several of our subscribers using your Lenderful Solutions tool, but what got you into this in the first place?
Yeah, so recently we merged with MIS, which is a national title company. And in that merger, we recognized that they were supporting the reverse mortgage space very efficiently and effectively. In our homework and our research, we didn't really see a point of sale tool that was in the reverse mortgage space. So we took the opportunity, we built something. We've actually taken off rather quickly, having a specific reverse mortgage point of sale tool where borrowers can go through and learn about the specifics of a reverse mortgage. It is a unique space. It's kind of a misunderstood loan type, and so this gives lenders the opportunity to educate borrowers. Number one, what is the specifics of a reverse mortgage? We'll go ahead and then we also give the borrower an opportunity to shop and see some estimated benefits online 24/7, 365, and then go ahead and start an application. And then we take that application information and we deliver it to back office systems and loan origination systems.
That's fantastic. Now, this tool, I believe, really goes far beyond anything that we've seen with your traditional HECM calculators, and there's some great ones out there. But tell us what your tool does that's different and how it can benefit our viewers today.
Yeah, so we took all that knowledge from the first mortgage space, and it does a soft introduction to the borrower, gather some personal information, deliver that into a great CRM like Reverse Focus offers, and then we let the borrower see the benefits online and play some what if scenarios. Are they want to do a 10-year payment, a term payment? See the calculations displayed right to them. Also gives a lender an opportunity, if they're having a virtual meeting space, they can display that on the screen and have a conversation with the borrower to really help guide them through that process.
So this tool can be installed on any website, is that correct?
Yeah, absolutely. So we've kind of taken two approaches with it. We work with mortgage brokers and teams like Reverse Focus work with, where it's an add-on to their current existing website, or we work with large financial institutions where we actually build a whole front-end space for them and create an opportunity for them to drive more opportunity, drive some leads, and drive more applications into a space that's rapidly growing. As we know, 62 is getting younger every year. Technology is a part of life. COVID put everybody into hyperdrive with that. And so the customer experience is expecting an opportunity or a way to go online and use a mobile, tablet, or PC to actually shop some programs and rates, see what the loan terms and benefits would be 24/7, 365.
I really feel this is key to keeping the website visitor engaged, because we know that engagement is really one of the most important metrics. So you can get their attention, hold their attention, and hopefully get them to submit a lead form. So does this calculator have the ability for the site visitor, whoever it may be, to say, hey, I'd like to learn more?
Absolutely. So they learn more, they see the benefits. They can engage if they're concerned. There's an opportunity where they can engage with the loan officer, submit a request, drive that lead and that opportunity to the loan officer to make sure they stay engaged with that loan officer. And then go ahead and if they're comfortable with it, we actually start a application form and deliver that to the LOS so you can help streamline that process and move it along.
So we're talking digital reverse mortgage application?
Yes, sir.
You know, we're a little behind the times compared to the traditional mortgage market, and I don't say that jokingly. It's just a fact because we're a smaller industry. So, kudos to you and Lenderful Solutions for really revolutionizing HECM calculations and also making it engaging and the digital application. Paul, obviously you're a golfer. I like those mementos in the background.
Yeah, avid golfer. It's a fun week this week with being U.S. Open week down at Pinehurst, which is one of my absolute favorite golf courses that I've had the fortune to play over the years. And I wish everybody a great weekend and a great Father's Day.
Thank you, Paul. Have a great weekend, man.
Thank you, Shannon. Appreciate it.
Total home equity for U.S. mortgage holders has rose to more than $17 trillion in total. That was measured in the first quarter of this year, and it's just below the record set in the third quarter of 2023, according from data from CoreLogic. The average equity per borrower increased $28,000 in 1 year and is now at about an average of $305,000 per homeowner. Now that according to CoreLogic's most recent data. Chief economist Selma Hepp said that's an increase of almost 70% from the $182,000 average equity that was held by homeowners before the COVID-19 pandemic. Today, about 60% of homeowners still have a mortgage. Now, we know how equity is measured, so we won't bore you with those details, but the important thing is this. The total U.S. home equity for homeowners with or without a mortgage is $34 trillion, so twice of what mortgage holders have. Now, many people have refinanced their mortgage earlier in the pandemic, and that's when interest rates were insanely low. So that allowed for more cash out refis or just lowering their monthly payment. And it may have allowed them to pay off other debts. But she said, for the people who owned their homes at least 4 or 5 years ago, on paper, they're feeling fat and happy, says Lee Baker, founder and owner and president of Apex Financial Services in Atlanta, Georgia. Baker, a certified financial planner, is also a member of CNBC's Advisory Council, and other financial advisors today say that tapping into your housing wealth is being complicated by high borrowing costs. However, some options that may have been attractive just 2 years ago are not attractive today because interest rates have increased so much, said CFP Camilla Elliott, co-founder of Collective Wealth Partners and also a member of CNBC, Advisory Council. Now, that said, there may be some cases in which it does make sense to tap into your home, and here are a few options available. First is a HELOC, or a home equity line of credit. That's typically the most common way individuals tap into their housing wealth, says Hepp. The average interest rate on the HELOC today is about 9.2%, and that is a variable or adjustable rate, so that means that balance can increase, and that would increase the payments in the future. A reverse mortgage is another way for older Americans to tap into their home equity. Like a HELOC, a reverse mortgage is a loan against the home's value, not the equity, but the value. Now, borrowers don't have to pay down the loan balance on a reverse mortgage each month, but the balance does grow over time with accrued interest and fees. They say a reverse mortgage is likely the best choice for those who have much of their wealth tied up into their home, and if they were late getting on the ball in rolling on their retirement savings plan and just pocketing that money away for non-working years. It's another source of potential retirement cash flow. Now, while reverse mortgages generally leave less of an inheritance for heirs or adult children, that shouldn't necessarily be considered a financial loss for them, says one advisor. Absent a reverse mortgage, those heirs may have been paying out of pocket to help subsidize the borrower or their parents' retirement income anyway. There were a total of 131 consumer complaints submitted to the Consumer Financial Protection Bureau, or CFPB, between January 1st and June 10th of this year that were related to reverse mortgage lending. That according to the Bureau's database. Now, there were actually 52 fewer complaints in the same time period when compared to last year. And 42% of those complaints were related to, quote, trouble during the payment process. And that typically means it has to do with customers seeking to contact their lender or servicer to fix an issue with the management or servicing a loan, reports Chris Clow in Housing Wire. Compared with recent years, the 131 complaints logged during the first 6 months of this year are actually lower than those that were seen in 2023 when we had 183 and 2022 when we had 229. But it is slightly higher than the 119 recorded during the pandemic in 2021. Now, these customer-submitted complaints only indicate some sort of dissatisfaction, but not that any particular party committed wrongdoing. In fact, the mass majority of the complaints to the Bureau this year, 97.7%, were responded to in a quote-unquote timely manner, according to the database. And the vast majority of those are listed as closed with an explanation, while just 4 of the 131 complaints do remain open. The highest concentration of CFPB complaints for reverse mortgages came from California with 20, since it's the most dominant state in the country in the terms of HECM reverse mortgage originations. Also, the other leading states for complaints that were submitted to the CFPB during this time period were Florida, that had 17, Texas had 11, Illinois had 7, Colorado had 6, and New York had 6. Reverse mortgage servicers do have to contend with some very unique issues that are part of reverse mortgage lending, and we have seen that there's a lot of work that goes into servicing these loans, especially when attempting to contact a borrower about what could be very important information. Now, while some servicers have explained that the borrower's original loan officer might be uniquely suited to help iron out some of those issues, officers are also encouraged to go through the proper procedures when communicating with their borrower's loan servicer. Sometimes loan officers don't understand that their permission to discuss the loan ends after the loan closes, said Gail Belletti, Senior Vice President of Client Satisfaction at CLIC. If you want to help a borrower in the servicing world, it's important that you get a third-party authorization from that borrower in writing. We can't talk to you about the servicing of the loan until we have that. And that's a wrap for us here at HECMWorld. Thank you so much for joining us. And be sure to return next week for more reverse mortgage news on the go. Have a great week.